Hello, hello. This is going to be a very basic video where I'm going to explain to you how to set up your TradingView charts, how to trade the NQ NASDAQ 100 futures asset, and how to find a basic setup that works and that sets up every single day in the market and can make you money. All you have to do is follow along and execute the strategy with a little bit of self discipline, and you too can be increasing your profits on a day by day basis trading futures. So let's get right into it, okay? I'm just kind of like not so good at this. I'm going to do the very best I can here. I'm a little new at this. Okay, let's talk basic setups. Um, I've always been told that the simpler that we can make trading, the easier it becomes. Well, it turns out that trading simply is definitely the better way to go, but you do need a strategy that actually works. Luckily, I can help with that. I will today give you a strategy that works on the NQ, but deciding to stick to it, that's on you. Trading is a lot of things. Easy is not one of them. Why? Because the toughest part of trading is getting out of your own way. So when you have a plan, stick to the plan. The strategy itself is easy. Self discipline is always the toughest part. Because learning a good setup is only about 1/3 the battle. The other 2/3 of the battle is execution of the strategy, following your rules of engagement, money management, and the overall discipline you bring to the markets each and every day. Let's talk about that a little bit more. Anybody can learn a setup. Anybody can learn. A 5-year-old can learn a setup. It's just basically an image. It's happening and it's changing and it's fluid, but it's just an image basically in the end. The hard part of trading, it will always be executing on your plan. And in order to do that, you have to have rules that you follow. You have to manage your money properly. You have to be able to risk no more than you can afford to lose on a trade, in a day, in a week, in a month. You have to live to fight another day. You have to place a stop, a mechanical stop on every trade. Not saying, well, when it gets to such and such a price of a loss, then I'll get out. No, you have to have a mechanical stop, meaning you program that into your trading platform so that you don't have to make that decision when it happens. It takes it out for you at the pre-arranged level of dollar loss that you feel comfortable affording. Now, you shouldn't mind taking a stop, by the way. A stop should never be anything more than just a paper cut to you. If you've let that stop run way past where you plan on getting out, then you're going to have a gaping gash, and you don't want to have that. That messes with your mind, and it makes you a horrible trader from that point forward. You just want to take your paper cut and go on. So, for a lot of people, this means trading much smaller than you think that you want to. Maybe you're only risking $20. Maybe you're only risking $50. I don't know what you're risking, but make it small. Make it where it doesn't matter to you in the slightest if you lose that trade. Okay, because once it starts mattering to you, you start getting desperate to make that money back. You start taking chances that you shouldn't take, leveraging your trades way bigger than they should be, doing stupid things in the market because now you're emotional, you're not calculating. So, again, the strategy is the easy part. Executing on the strategy, following the plan, following your rules, managing your money, managing your risk, bringing discipline to the markets, that's always going to be the hardest part. So don't get into this game if you don't think that you have at least a modicum of self control when the going gets tough. You have to have self discipline and the ability to follow your plan. Otherwise, this will never work for you. Okay? I sorry to go on and on about that, but that's probably, if you take nothing else today away from this training, please take that away today. Okay? Setups are easy. The self-discipline to follow them and to manage your money properly is the hard part. Okay? Just know that going forward. Okay, that said, let's jump right into the good stuff. You know, the stuff that can actually make you the money. Okay, we're going to talk basics right now. We're going to get into the charts. We're going to set up your charts. We're going to put your indicators on your charts. We're going to show you some basic candle formations and candle patterns that pay. And we're going to do all that right now. So, what do you need? Okay, here's what you're going to have in order to make money in the markets. Number one, you're not going to make a single penny if you don't have volume and price that's moving around on the chart. You need a good time of day. You need slope. Okay, you need trend. You need movement in the market. And traditionally, that's going to happen at times of high volume, which are the New York Open, right after a news event or during and after a news event. And during any kind of black swan event or any kind of sudden sort of shift in the consciousness whereby maybe there's a Trump tweet or something, some news comes out about, unscheduled news comes out about, maybe a major war starting or something like that. But basically, you've got preset news events that happen, and you can go to forexfactory.com to find those. Just type in forexfactory.com. Every day, you've got red letter events that may or may not occur. Today, Tuesday, August 12th, we had core CPI at 8:30 a.m., and that definitely pushed the market around. No question about it. So you got to have things like that ready to go. You got to know when those things are happening and be ready to trade them. Okay. So what did I do? I just got out of my slideshow. So let's go back here. Okay. So you're going to have slope when and if you have volume, and that happens during pre-scheduled news, unscheduled news, and opening and closing. Okay. You need a liquid asset. Okay. I trade the NQ. It's very liquid. You can get in and out very easily. It's got a tight spread. You're not having to pay multiple ticks up to get in with a market order or multiple ticks down to get out with a market order. It's a tight spread for the most part, and it's a good liquid asset. You can also trade ES, which is the S&P 500 futures. I like NQ because I find it to be very predictable. Okay, and you need charts that make sense, and I'll show you how to set those up. Okay. So the basics. I'm going to get into some TradingView basics here with you. The way I do it with my setup. Okay. So number one, multiple screens or chart frames. Okay. I trade off 4 different chart time frames. I trade off the daily, the hourly, the 15-minute, and the 30-second. Okay. I'll go into a little bit of the background of the way I set them up. I like a white canvas. Most people like black, but white works for me. I use volume candles, and the indicators I use are 3. I use customizable EMAs, MACD, and volumes. Let's get into all these things right now. Let's get into multiple screens and chart frames first, okay? So number one, what I do with my TradingView charts is I set this up here for two charts per tab. So I've got my 30-second and my 15-minute on these two. Here's the 30-second. Here's the 15-minute. And then I have another tab where I put 1-hour charts. You can see the time frame right here at the top. 1-hour charts and daily chart. Okay. So those give me the 4 time frames that I need to make informed decisions about what I think price is going to do. Okay. Let's get back and look at what else we've got here. For the background, I use a solid white. Now, not everybody does this. The way I find that is I go to settings, then I go to canvas, and under canvas, I use solid, and under this click here, I just click white. Some people like a black chart, I like a white chart myself, okay? That's just me. Basically, when it comes to the trading, I like to, on the symbol, I like to use the electronic trading hours, okay? Session, electronic trading. That gives me not just the New York session, but also the overnight Globex session. And for me, that's super important because with futures, you're looking at the overnight action, the Asian action, the London action, and that forms a part of my setup because it shows me where my pre-market electronic trading session highs and lows are, and that's a very important part of my overall setup. So that's what I do with, again, you can find all this under this little gear icon, settings. Again, I go for the symbol. It gives me the canvas. Excuse me, canvas gives me my background, which I can set up either black or white or any color really. I like white. And as far as the trading itself, I like to go for the electronic session. Let's see here. What did I just had that, right? Maybe it's under symbol. Yeah, it's under, sorry, it's under symbols. I like to go for the electronic session. That gives me the overnight action. Okay. All right. So let's talk about Let's talk about volume candles for also. I use something called volume candles. Okay, and this is somewhat new. Here under the candle types, you have these options. The fat candles over here are the volume candles, and basically what those do is they will show you, just like your volume shows you how much volume there is, the thickness of the candle itself will actually indicate to you how much volume is coming into that time frame right there, that 30-second time frame. So a big fat red volume candle is telling you there's a lot of volume happening in that time frame, that 30-second time frame. If the candles are super thin like this one, not so much volume. Okay, so because volume is such an important part of trading, and you need to have enough volume to push the market around, it's a nice extra indicator to see where you've got volume. Okay, so those are the volume candles, and again, I found those. I can place those by just coming here under this volume indicator and clicking volume candles. If I place a star on it, if I light that star gold, then that's always going to be at the top here as an option. Okay. The next thing I look at are my 3 indicators. I use customizable EMAs, MACD, and volume. Okay, so let's get into all that right now. As far as that goes, you go under these indicators here, and if you want to find that one, it's customizable daily EMAs by NADNERD 217. That's the one I like to use. The reason I like to use that one is because when you program that indicator, you can check and decide what time frame that indicator is acting on, even though you may not have that time frame on your chart. For example, I've got the 1 minute, okay, and this is where I can pick that, the 1 minute 8 EMA on my 30-second charts here. I've also got the 5 minute 8 and 9 EMA on my chart here, and that's these two. I've also got the 15 minute 7, 8, and 9 EMA on my charts. Now, why do I have 3 different EMAs, 1 minute, 5 minute, and 15 minute on a 30-second chart? Well, it's because price responds and reacts to all those EMAs, okay? And how better to see them that have the candles a much faster time frame than the EMAs are, so that I can see a close-up microscopic view of how they're interacting with those EMAs. For example, here's a trade I took on Sim because I was already finished trading this morning at the close today. I could see very clearly with my 30-second candles that price came up, back tested this EMA right here with what I call an engulfing candle. Okay, the reason I call it that is because it's exactly what that is, and it's sitting right on the line there. Okay, an engulfing candle meaning that it's the high of this green candle here is higher than the candle that preceded it, and the low is lower than the candle that preceded it. That's an important part of my strategy. I'll get into that a little bit later, but having the 1 minute right here where I can see very clearly how this 30-second candle is responding and reacting to this 1 minute EMA just gives me a very microscopic view as to what's going on here, and allows me to take a trade that I want to take. If I was trying to take this trade on a 1-minute chart rather than a 30-second chart, it would look a little bit different. Okay, here's what it would look like, and you can see how I don't have quite the same amount of detail. It's not too bad. It's not too bad. Okay, but as you can see, I don't have the engulfing candle any longer, do I? So I don't have that additional tidbit of information to tell me that's a great place to get into a trade. Yeah, it's still kind of pulled back against the EMA there, but it's just not the same level of detail as just an extra candle per minute would give me with a 30-second, or even I could even go 15 or 10-second if I wanted to. Lately, I've been liking the 30-second charts because it's enough of a candle that kind of gives me a bigger picture view of what's going on in that time frame, but it's small enough that I can still kind of make split-second decisions and get in and out of things easily and quickly. So again, that's the customizable daily EMAs, and I can have up to 8 within any indicator. So I have 3 instances of that. One of them, like I said, is the 8 for the 1 minute, the 1 minute 8. The next one, I have 2, the 8 and the 9, okay? And then the third one, I have 3, the 7, 8, and 9. And why do I do it that way? I can tell them apart easily. The first one is 1 minute, the 2 is the 5 minute, and the 3 is the 15 minute. And there was actually a great setup here earlier that you can see that it went directly to the middle of that EMA, and then it kind of set up, and I'll show you again where that setup was. Here is your engulfing candle right here, and then here is let's see, yeah, that was the engulfing candle that came after. Here's another engulfing candle right here. So either one of these would have been fine in order to take this trade, as long as your MACD, which is the next indicator that I'm going to talk about, is doing what it's supposed to do, which is turning up. Okay, so let's get back up a little bit here. Okay, so we've gone through how to set up the background. We set up the volume candles, the custom EMAs. MACD is the next. Okay, I'm going to show you the MACD right here. I find that under indicators, and we go to moving average, convergence divergence, this one right here. There's another instance of it, which I will now erase. And essentially MACD is just it's 2 moving averages, and it's where this blue line is the MACD line. That's where I think it's 29 minus a 12, and then this one is the signal line, and it's basically a 9 EMA of the MACD. So basically this shows me oversold, overbought, and when you have a cross, that's generally a good place to confirm that trend has pivoted and trend is now moving in the opposite direction. Okay, the final indicator that I have is just simply volume. It's a very simple one. Everybody knows volume. I don't even sometimes think I need this when I have the volume candles, but I've always had volume, so I probably always will. I just keep it on my chart so that I know if the volume is declining, which it generally does after the open, or if it's increasing, which it generally does with news. I like to know when things are getting more or less voluminous, so that's why I have volume on there. Okay? All right, so that goes through the TradingView chart basics. Try to make that quick and easy. So let's talk about how to set up the charts. Okay. Setting up your charts is part of the setup strategy. And number one, I do horizontal levels. Okay. Number one is horizontal levels. And for the horizontal levels, I do something called big rounds, half big rounds, 26 and 77. This is for the NQ. Okay. I do pivots, places where price turned around before. I do pre-market levels like trading range high and lows, pre-market actual high and lows, prior day high and lows, and pre-market pivots and prior day pivots. So that's a lot, okay? And maybe I'll get into more of detail on these in another video, but for right now, I'm just going to show you real quick, okay? In the interest of saving time, what these levels are. Okay, so we've got big rounds just means wherever you've got a multiple of 100. So I'll put that in using this line right here, horizontal line. Click here on the chart, and then I've got a horizontal line. If I double click that, then I can actually add text and say, yeah, I want a big round number, or I want say the number itself, whatever it is, like in this case 23,900, whatever. Just do that, and that winds up on the chart there. Same thing for the halves, 950 I put. And then you've got 77s and 26s, okay? These are key levels also to put in because price definitely respects these areas, and they become levels that we want to take trades off of, okay? All right. Pivots, places where price turned before. We had a great example of a pivot today in the market where price turned and trade setups occurred. This happened, if you'll notice, we had a setup happen here, price turned here, and then price turned again here. So that became a great place to go ahead and take trades from. Actually, let's see. This was the pivot right here. Let me just put this on. As you can see, price turned here, and the same place it turned up, and then here it came up and turned down. And then later on, it became a great place to take another trade from. So as you can see, these pivots are great places to be aware of and look to take trades from. Okay. Then you've got pre-market levels, trading range highs and lows. For this, I go into the pre-market, and the pre-market, as long as you've got that electronic trading set up, you're going to have this light purple background here. And let me just go ahead and put this, let's look at the 15-minute chart just because it's easier to see what's going on with a 15-minute chart. What I've done here for the trading range pre-market is I've gone ahead and looked at where you had multiple swing lows in the market. Now, the actual pre-market low is down here because that's the low point of the pre-market session. But what I call the TR low, the trading range low, is where you have multiple touches. So let's find the spot, right, where you have these swing lows that happen in the pre-market, as many touches as we can. So if I come up and look here, I can have the line touch this swing low, these swing lows, and these swing lows, okay? So that's what I'm going to call my trading range low of the pre-market. I'll do the same thing for the highs up here. Here we basically, we had a big swing high up here and then another one here. So I'm going to go ahead and just put it right here where I get a couple of touches right there. And that would be my trading range, my TR high for the day for pre-market. Okay. These are going to be areas where price generally tends to either stop or turn. Okay. Then you've got pre-market actual highs and lows. So let's get into that real quick. The actual high here, it was up here. It's not marked on this chart. And the actual low was down here. That is marked on the chart. Pre-market right there. So that's the actual. And then you've got prior day highs and lows. Just go into the prior day's price action. Mark that low right here. Here's the one for yesterday. And here's the one for the high for yesterday. And then you've got prior day pivot and pre-market pivots. That's just the midpoint of the actual range. So you can put those in by just using a Fibonacci tool right here on this, click here, put the top on, put the bottom on, and the mid-range will be right here. You can use a horizontal line to enter that range and then double click it and put the price on. So, okay, so that's how you do that one. And go ahead and erase that right now. And then you can do the same thing for the pre-market. That way you have the midpoint of those ranges. So when price is ranging around on your chart, you're like, hey, I know where the midpoint of the range is. And generally it would be a level that you can trade off of, or that you can be bullish above or bearish below, that kind of thing. Also, we had news, and I put the news pivot in. I thought that was an interesting level as well. We had news. I marked the high and the low of the news, and then marked the midpoint of that, and marked the news pivot. Okay, so those are all the horizontal levels. Okay, then you have your diagonal levels based on 1, 5, and 15-minute 90 EMAs, which I already showed you that. These are the three that we're looking at. Okay, and these are always going to be, you don't have to move these from day to day. They're always going to be tracking price. The horizontal levels are the ones that the 77, the 26, the big round numbers, and the half big round numbers, they're always going to be there as long as you put them in. And then the ones that change from day to day are going to be the range highs, range lows, actual highs and lows, both for pre-market and for prior session, and the midpoint pivots, and any news pivots or any news ranges that you want to add on there. So you can do those at the beginning of the session before the session opens. You can do the Globex overnight session, and you can do the prior day session. Those aren't going to change once the New York session starts. So you can just do those at like 5, 10, 15 minutes before the New York session begins, and they're good to go. Okay, now why do I give you all this information? I give it because this is where trades will actually set up. The best trades are actually going to set up from. Let me give you an example of that, okay? For example, all right, sometime around 10:45, we had a huge breakout today in the NQ. We started making all-time highs, okay? By the way, the all-time high was on here as well. That's always going to be, and that's going to have to be changed because we made new all-time highs today, obviously, right? Okay, but, you know, price was kind of bouncing around today. We had the news, we had a pullback, we had another bounce, a big pullback, okay? And if you look to see my trading range low, which again I got from finding multiple touches on these swing lows, where I could find a line that kind of could connect as many swing lows as possible. It just turns out, just coincidentally, that when we had a low of day today, it came right just above that, just a few points, maybe 5, 6 points above that level. So that was a level to keep an eye on. And if you're good at recognizing chart patterns, you'd see one of your first trades of the day here. That trade, in my opinion, and I think I called this out in the room earlier today, was an inverse head and shoulders. So if you can see an upside down head and shoulders here, it's pretty obvious actually. When you see price come down to this lows down here, you know that's going to be the head. As soon as you know the head, you can look to the left and you can find the left shoulder. And that now you're looking for price to bounce off this this shoulder area, which it did right here. Now, if you know that you like to buy hammer candles on a 30-second chart, okay, they're not necessarily always going to have to be engulfing, but look at these candles. Okay, now you've formed your left and right shoulders in your head, and now you're looking for an entry, okay? I like to enter on hammer candles without top wicks. Why? Because the wick should be at the bottom. In other words, you're shaking out any longs that just don't have the stomach to stay in, okay? But you're ending strong, okay? You're shaking out longs that don't have the stomach to stay in, but you're ending strong. That's why I like hammer candles. So that was the first hammer candle in this pullback to this right shoulder here. The head was formed at the trading range lows. You look left to see the left shoulder, and then you wait for the right shoulder to show up. Okay, it's bouncing off two things that we've already discussed that were important: a 77, which is a horizontal level, and a 1 minute 90 MA, which is a diagonal level. Okay, so you've got everything you need. You've got a pattern, you've got a horizontal level, you've got a diagonal level, and you have an overall pattern. Like I said, an inverse head and shoulders. You're not always going to see that, but it's nice when you do. And then you've got your 30-second hammer right there. That is your buy signal right there. A hammer candle where as price has pulled back to the level, it's bounced off the level, and it's forming a upward trend in that level. You've got MACD, which is in above the zero line, which is very bullish here, and spreading out, and you've got this. And then what happens? You can enter here with a stop under here, and then you can just ride this up. Now, maybe you're a scalper and you just take a few points, or maybe you're somebody that likes to swing trade or intraday trade, and you can trail your stop behind price as it climbs up here about, I don't know, 50 points or so, which is an amazing trade. So I just showed you a setup, okay? And all setups that I want to show you today are going to be just like that setup. They're going to have a combination of a trending price, a pullback to a horizontal and diagonal level both, where price meets horizontal and diagonal levels that we've already established, and then you have a nice hammer. Maybe it's engulfing, maybe not, but it's the first real hammer in the setup. That's the one you want to buy with a stop placed under. What else are we going to talk about today? I just showed you everything you need to set up your charts and your first trade. I kind of jumped ahead of myself. So the setup. Let's look at the basic setup, the intersection. I just showed you one. How patient are you? Can you patiently wait for a good setup? That's a real question. Because if you can, this intersection setup will appear a few times a day, and it does work. Okay, it's all about confluence. I just showed you this. You want to wait for 3 things to match, then one more thing to happen. What are those 3 things? Price, horizontal level, diagonal level, and then what's the one more thing to happen? Your 30-second hammer. Okay? If it's all about confluence. If you can wait for those three things to match, and then the one more thing to happen, you've got a winning trade on your hand probably 80% of the time. Okay? So the intersection trade happens, again, this is repeating this, but it's important to remember. Let's look at it. Trending price action pulls back or rallies in the case of a short to intersect with a level that we've already discussed and an EMA, which we've already discussed, and then continues on in the original direction. So let's look at another example besides this one, which we just looked at. I saw one back up here, which was pretty interesting, that happened later on in the session. And this is actually a trade that I looked at for the end of day. Now, the end of day is a good time to trade. Usually in the last like 5, 6, 7 minutes, you'll see a setup. And now this one, price was getting a little squirrely here, but it did give me a beautiful setup, okay? So here's the setup. You have price pushing up. It pulls back to this 26 level, and then it's bouncing basically in between two EMAs, okay? The 1 minute 9 EMA, which is right here, the single line, and the 5 minute, which is that double line. So you've got the 26 level, you've got price pulling back to it, you've got the 9 EMA on the 1 minute, and the 9 EMA on the 5 minute, offering your support. Here's your hammer, okay? It's got a tiny bit of a top wick, but not much. It's also engulfing. It's a round. It's higher than and lower than the red candle to the left of it. And so that's your entry right there. I actually traded this on Sim because, like I said, I was done trading my real accounts for the day early in this morning off the news. And it spiked right up to what? Another level, the 950. You see how these price goes from level to level? It's very predictable after a while. So that was a cool little trade. And on Sim, I actually, that was my final trade of the day on Sim, which was worth $250 because I had one mini on it. So we haven't talked too much about the asset, the NQ, but I trade one mini. Typically, a very typical trade for me will be one mini with about a 12 and a half point stop and 12 and a half point or more target, which is a $250 stop. And is that right? Hang on. One mini, just 10 micros times 10. Yeah, about 12 and a half. Yeah, it's about $250. So, you trade a bunch of those a day and win 80% of them. Let's say you take 5 trades, you win 4, you lose 1. You walk with about $750 for the day. So it's not a bad day. All right. So we talked about that. I showed you 2 examples so far. And basically, that is the trade. So your job is about timing the entry and managing the trade. That's it. Time the entry, manage the trade. You can use MACD to time the entry. Let's look at how to do that. Okay. Let's look at yet another example here. I want to use multiple examples for you so you can see everything I'm seeing. Okay. Let's look at this one over here when price popped above the all-time high and pulled back to it. Okay. All-time high should always be a level on your charts. Always. Okay. That's a very important level to put on your charts. All right. Should always be on there. So in this case, we had price rallying up and then pulling back to the all-time high, which I've marked here as this horizontal level. And what's 2 lines? That's the 5-minute 90 MA. Okay. Now, MACD is where you get kind of into the weeds as far as timing your entries. Typically speaking, you want to wait for price to get oversold on MACD and then make that turn, get that hook and start crossing. Okay. So if you're good about waiting and you're a patient person, you can wait for the MACD. Now, I don't see a great looking hammer here after MACD is turned. What I do see, however, is a pretty strong bar here. That would be something I would definitely be interested in buying. Okay. It doesn't launch right away. It kind of dances around at the top edge of that. If you're uncomfortable with that one, you can wait a little bit longer and wait for a combination of these 2 candles. Okay. You've got a hammer and then you've got one more green candle. So if you've got a red hammer, just go ahead and wait for another green candle right after that, basically turning that into a 1-minute green hammer for the most part. So that's an option. So, it's like I said, this is not always going to be smooth and easy sailing. You're not always going to get the perfect chart pattern, the perfect candle formation, etc. But you do the best you can, okay? You get the overall feel. And the MACD will help you with that overall feel because it's going to show you that price is now turning up, okay? Your histogram turns green, your fast line crosses, your MACD line crosses the slow line, which is called the signal line. And then you've got to find the right candle pattern to enter into. Essentially, I like hammers that stick out like this one, okay? Why? Because it's shaking out the last of the longs that are weak and don't want to be in, and it's ending strong, okay? So it's basically helping you get rid of the most of the sellers that might be there in that moment. It's kind of assuring you that most of the sellers are out and the only people left are people interested in buying. So that's really why I like hammers. And this is a red hammer, so it didn't finish exactly above where it started, but it wasn't too far off. And again, if you're more comfortable waiting for one more green candle right after that, then go ahead by all means and do that. Okay? So that's your setup. You've got a strong push up. I call that an impulse wave, okay, or an initial wave, a pullback to support, horizontal support, right, and diagonal support where they intersect. That's why I call it intersection trade. And then you find the candle that feels right for you once you've got your MACD that's rounding the turn, okay? Then if you're just a scalper and you want to take 10, 12 points off, which I like to do a lot, take your 10, 12 points and wait for the next trade. Okay, that's it. Time the entry, manage the trade. You can use MACD to time the entry. We just looked at that. We just looked at how to do that, okay? Decide what you want before you get in. Always set a stop. Scalp or longer term hold. That's up to you. If you are buying at the bottom of the trading range, you might want to hold a little longer because, basically there's 2 ways to get into a trade. There's 3 ways really, but let's look at the two polar opposites. You can enter along at the top of the chart, and that's kind of like going to a baseball game and sitting in the cheap seats, way at the top. You can't really see much. You're probably not going to get a very good view what's going on, and it's not going to. These are nosebleed seats, okay? They're not the greatest seats in the world. You can also fall out of those seats somehow and hurt yourself. So, probably a better way and a way to ensure that you're going to get a bigger reward is to sit down by home base. Okay, sit close in trading parlance. That's sitting at the bottom of the trading range. Okay, close to home. You get a good view of the action, and you can watch the batter hit it out of the park from the batter's perspective. Okay, so that's based on you. You get in where you want to get in. But let me just tell you that, especially I'm looking at this example from today. You had a trading range level that was a great level to buy from. Why? Because it had more room to run, right? It had more room to run. So we had that level that was way down here that was marked before the market ever even started as the TR low, pre-market. We got that from looking at the swing lows in the pre-market and connecting the dots, finding a line that connected all of those swing lows together, okay? That became our TR low, or trading range low. It wasn't the low, actual low of the pre-market. It was the trading range low that connected the dots between all the swing lows. Okay, when price got manipulated and shoved down there, where did it go? Just a couple points above that TR low, okay? Then, again, you've got your inverse head and shoulders pattern that you could be looking for, and your hammer here that you could buy from. And, you could have done real well with that trade, and if you'd held it all day, well, you'd be a multimillionaire by right now, okay? So, that's your choice. You can buy low, you can buy high, do whatever you want to do. You're going to have more room to run when you buy low, okay? Now, I'm comfortable taking 12.5 points profit. Why? Because most trades are not bought at the swing lows of the day or near the swing lows of the day. Most trades happen here, there, and everywhere. And most trades are not going to run 50 points. Therefore, if you're good and you're good at identifying these trades, just take your money off the table and go on to the next one. It's not necessarily even called scalping. I think 12.5 points is a reasonable amount of points to take out of a trade. That's 50 ticks. That's not bad at all. So, like I said earlier, if I take 5 trades and I win 4 and stop out on 1, every trade's 12.5 points, win or lose. I'll make 37 points. 37 points trading 1 mini is $750. I'm okay with that. Okay? So, I was going to look at a few more examples when I got to this stage, but I've already shown you 3 examples. I think you get the picture. I mean, these trades basically are, again, I'll say it, the intersection trade, okay, is where you've got an EMA, in this case a half big round, intersecting with a horizontal level, okay, in this case a half big round, 23,750, merging with a climbing EMA, in this case the 5-minute, and merging with price, okay? When all 3 of those things come together, you've got a setup. Then all you need to do, check down for MACD, take a look, make sure it's turning back up again, and then find your hammer. In this case, the hammer occurred right here, okay? Get in, and boom, you're off to the races. Hey, you could even ride the 1-minute 9 EMA all the way up if that's something you want to do. If you're like, well, I'll just stay long as it's above the 9 EMA, that's an amazing trade right there. Not bad at all, right? So yeah, I think you get the picture. I don't need to show you tons and tons of examples. This is a simple trade. This is a very simple trade. You take horizontal level. You take a diagonal level. You take price reacting to that. You take a hammer candle on a 30-second chart, and you get in and you get long, or the opposite direction, you get short, and you just manage the trade however you want to manage it, okay? So that's it. I'm not going to show you anything else. I want to keep this really simple. This went a lot longer than I thought it would, but there was a lot to talk about. And I showed you a lot of things today. I showed you how to set up your charts. I told you that you need to be patient and wait for these trades to set up. If you're a click-happy trader, it's not going to work for you. It's all about confluence. You need to wait for those things to match up together, but when they do, the trades work out well. that happen when the trending price pulls back or rallies to intersect with a level and an EMA, and then it continues in the original direction. Okay, very simple, right? Your job's about timing the entry, managing the trade. That's all you have to do. Decide what you want to do before you get in. Always set a stop. I'm comfortable taking 12.5 points, 10 points profit, something like that. We looked at examples. We know exactly what we're looking for. And that's it. There's really nothing else to say. That's your setup. I hope you trade it tomorrow and make a ton of money.